Hi everybody, it's Adam. I'm back here with another video. We're going to get into projections and also what happened here today. So what do we have? We have this fair value gap here, and then also this breaker that's within this area. You draw that out in time. We have all this buy side up above here, up above here, up above here. But you can tell, based on the picture I showed you yesterday that actually ICT tweeted too, was that all the sell side was taken here, sell side was taken here, and then even today, I noticed that we came down into this rejection block and we started trading off of that range. But getting into tomorrow and then even the next day, what can we possibly expect? So we have this launch up higher. We can possibly expect a low range day tomorrow, so we can get a daily fair value gap formed within here. So Friday can either give us a sell off or just a wick down into the fair value gap and a continuation up into these higher volume imbalances up within this range, up within here. So that's a possibility. So my eyes are going to be on this volume imbalance here, then also the weekly levels as well up above this rejection block, and also up above this high, and possibly even above these equal highs as well. So now getting into what happened today in price action. Price traded up here during London session, took out this high in New York, and then started trading down. I personally did not know if it wanted to keep going down below these lows or start going higher. But if we go over here to the two charts, we can see that price action, let's get into it here. We came down below this area here into this rejection block as well. And if you go over to the regular trading hours, you can see that NASDAQ actually took out the lows on the regular trading hours right here. But on the electronic trading hours, it did not, as you can tell. I mean, relative equal lows here started trading away. That's why it's very important to go to the regular trading hours so we can see that. And over here on ES, let's pull this up. We just have this area here. We traded down below, down into this area, down within this range. Nothing really too much there. But getting into the price action, what did we see? So back over to ES, we'll put all this on the chart. So I changed up my chart from yesterday. Instead of using the new week opening gap indicator, because if you go down to the 1 minute, it disappears. But if you actually mark them up yourself, which is what I did here, I put the dates of the new week opening gaps. And those act as support and resistance as well. So notice that price traded down into this range, and we had these wicks within here. If you're on the 5 minute time frame, this made the lower low. But if you look at NASDAQ, we actually made the higher low as well from this area, tapped into the weekly gap from the higher time frame as well. Let's actually pull that up so you guys can see that again. I mentioned it yesterday, but this gap within here, this void that's sitting right within this area, is this blue box, and it starts to act as a form of support when we return back down into it, as you can tell right here. So getting down into ES again, what do we see in price action? Let's get over to it. So we traded down on through using one of my trading models that I like to use a good amount of the time. It's basically this one reversed. So it's looking at this accumulation, then we break up. Well, we break down in the buy scenario, then we break up, and then we start to retest. This is just one that I created myself, but if you flip this around and use a sell one, it's consolidation, break up on in, shift down lower. So that would be this area. We shift down lower again, and then that would be this area within here to then continue down towards the sell side, which would be down below this low and down below these relative equal lows here. So all of London traded on up in, and then we traded back down at the market open, giving it the 9:30 New York Judas swing to then trade down within that area. Price then starts to break higher, so it gives us a drive lower, a drive lower. I wanted to see from here if we wanted to trade back down on in to give us one more tap in, but we did not need to do that. Notice that we hit the new week opening gap, which is the 331 low right here, 331 to 42. So that area was met here, bodies closed up above it. It also hit the opening range closing price. As you can tell, you go to regular trading hours, you can see the regular trading hours from this session. So it closed here yesterday, opened up here this morning, traded down on in, closed the entire range. So now I'm looking at this area to see if price wants to continue up higher or start to reverse back down on in. Looking at price. So what did it do? Shifted up higher within here, basically accumulated, wicked right back down on in, shifted up on here, and now we have this high and we have this high. Okay, so there's relative equal highs here, and now we have a area that has an inefficiency up here in the 1 minute. So this is where you want to like rewind and then go review, just so your eyes can get drawn to these areas. So we have this drawn liquidity up within here, and then we also have a higher inefficiency up here Also the 15-minute time frame, these inversions, I've really been back testing them and looking at them more often. It can act as potential draws in liquidity as well. As you can tell, we get up into this 15-minute inversion gap. So this is a fair value gap from here to here, breaks on through. So now it's an inversion gap, and we want to see if price can get back up in there, can actually act as a magnet to price action. So price reaches its way back up in there, and then it just accumulates within this range. I was not expecting too much more once it did get up into there, but once we started trading away using this low here from 4133.25 right here would be a really good position based on the daily volume imbalance low. So if you go to the daily time frame on your E-mini chart, you'll see that the volume imbalance on the daily is a low right here. So we hit that and then we start to trade away. And at the same time, this is like another one of the trading strategies that really works out well. We had bullish SMT with NASDAQ. So at this time, we made from this low to this low here, it was a higher low. But if you look here, from the same low on NASDAQ on the right, we made a lower low, as this one was making a higher low on top of a volume imbalance on the daily time frame. So based on the silver bullet time frame we're in, we're at 10 o'clock to 11 o'clock, and this happened at 10:24 for a potential entry to go long. Go to the 2-minute time frame. You can really look at these candle closures. This is really bullish. A 10:22 candle closed very bullish up above this range within here, up above these bodies, getting a retest down within this range. At the same time, we're creating that bullish SMT when NASDAQ was in this blue box as well, which was, I believe this was the 15-minute fair value gap as well, that was used as an inversion support. As you can tell, yes, right here. As you can tell, right there, at the same time, it traded down and into that gap. We were looking for higher prices here on ES. So getting back over to ES, we ended up trading up on in, creating these relative equal highs again. All right, so these relative equal highs right here, and then it just accumulates. All right, and we're about to hit our macro from 1050 to 1110. And we're looking up into this, these equal highs, and also looking to see if we can hit up into this new week opening gap from 47-49. Because in periods of consolidation, which is the higher time frame as we've been going over, prices tend to gravitate towards new week opening gaps. Which the next one up here is stalled right before it. People placing their stop loss here, and also down here, and we have this PD array, which would be this inefficiency, this inversion gap that's going to act as a form of support, as you can tell right here, right here. These bodies are closing on top of it. I wonder if we measure 50% of this. The bodies and wicks end at the 50% of this inversion gap. So then it trades down below this low, and then we start to trade up higher within this range and tap right to the new week opening gap, as you can see to the point right there. Come up on in, play around the other side of the other new week opening gap right there, trade back down and in, and basically I'm done at this point. It runs up, takes out this high, trades right back down into this range within here, back to these new week opening gaps, as you can tell right here, these horizontal lines, and then we start to break up on in through lunch session, trade up into here, and then really the highest probability entry in the entire day would honestly be this one right here. And you might be asking me why this would be it. It's because look at the consolidation range we're in, up above this area, 5-minute time frame. Notice these bullish closures we're getting, but what really gives it away is this fair value gap here, and also the SMT divergence we see with NASDAQ, which would be right here. So notice how we're making higher lows here on the left, higher low. We're making lower lows here, down into this down close candle, this order block. So once we reach down into that order block, we start to trade away around this time. We start to trade away here, 2-minute time frame. You can really look at price action again here in the 2-minute. We trade up on in. We create a high probability order block here in the 2-minute. As you can tell, there's no wick on this order block. So it comes down right to the point and then trades away. But you might be asking me, why did I not take this trade right here? It's because look at the time we're in. It's at 12:24. I do not like to take trades within the lunch hour. That's when I walk away. I go take a break. I go eat my lunch. I work on my other business around this time because you cannot sit in front of the charts all day long. There's a bunch of opportunities within here to make a 5-handle run, as you could tell from here to here. 5 handles up to the inversion gap. Okay, that's all we're really looking for. So that was it right within there. Trades away up within that range. At the same time, NASDAQ starts to trade higher above these relative equal highs up to this area here as well. So if we go over to the 1 minute chart again, let's get down to see what this candle really looks like here on the 1 minute. So as you can tell, this high probability order block, no wick on it, trades down. So what's our trading plan? Our trading plan is liquidity. NASDAQ took liquidity within here, took the low, okay? As you can tell, took the low, took liquidity. Now, where's our draw on liquidity? Our draw on liquidity is the NWOGs up within here, all right? So we have our draw on liquidity. So now is that enough for 5 handles? Up to the high of the NWOG, up within here, and up within here. Yes, enough for 5 handles. Okay, now we're looking for basically our market structure shift, which would be right above here. So we have our market structure shift above this range, all right? And then our next confirmation is how do we get in sync with order flow towards our draw on liquidity, which would be looking for fair value gaps, looking for order blocks, looking for breakers, and looking for volume imbalances and looking for candle closures and how they're respecting the areas. Respect, especially after this 1 minute candle here closed, whips down in, hits that order block, boom, trades away. But the one thing, the key crucial thing in this trade was time. Like I said, it's not time. It's 12:25. Trades away, feel no emotion of missing out on this trade, comes back up on in. So then we hit 1250 to 110, and then we just start ripping on through, continue towards this new week opening gap up here, and then we came up, rejected it. Look how this body closed right on this new week opening gap, trades away, and comes back up in it, and starts respecting this area. Notice the body closures, look at the wick, comes up to here, look at the wick, right there, boom, body closure, all right? So this whole area is being respected, trades down back on through. But this whole time, if we're looking at our macro time frames from when we want to trade, we want 1250. You could even see now. I didn't review the PM session too much because it just traded away. And I'm like, okay, I got better things to do. I don't need to go here and try to gamble my money away when price already moved in this direction. But let's see. Let's see if anything happened here. So 1250 right here. So to trade up higher, trade it back down on into this range, respecting these volume imbalances here, respecting the down close candle order block within here. Same with here on NASDAQ, respects the volume imbalances, trades away. So trades up into this range again, and then we just continue up higher towards these new week opening gaps. So breaks up higher, retest the high of this breaker up within here, up within this wick, draw that out, trade it on up within here, tap up into this gap, and then there we go. We trade away. All right. At the same time, NASDAQ starts trading back down on in here. And there's really nothing, in my opinion, for high probability entries within anything like this. We start to consolidate within this range. We start to trade on down. We break down through. So once we break down on through this area, we can look for a deeper retracement within a premium, which would be from here to here. Draw that for value gap out, respects it, comes down sell side. Inefficiency gap it tapped into, created 1, 2, 3, shifted up higher. Okay, so this created a lower low right here, where we actually made a higher low. So from here on NASDAQ, from here to here is a higher low, from here to here is a lower low. We trade up on in, didn't break any market structure, as you can tell. It did here on NASDAQ, but depends how balls you want to be with a trade like this. If you look down here in the 1 minute time frame now, scrolling all the way into these inefficiencies, look at this candle. We tap down into this fair value gap here. Boom, we trade away. We have a market structure shift above this high. And it's also a key time. So our key time is 250 to 310. And we are in that macro time frame, and it's 303 right now when that trade formed right there. And it started trading away within that range. If I was here in front of the charts, I probably would not have taken that one. It happened really, really fast. I would have wanted to wait for more confirmation. Let's see if this wick came down into here after this structure shift, targeting this high back into the NWOG, and also up to the high of the NWOG here, but did not form, obviously. Price ended up coming in the NWOG, trading back down on in, traded down within this range, traded on up into here, pulled back, didn't really give a nice pullback down into this gap either. So nothing really clear after this market structure shift. Traded back up on into the higher part of this range within here. And then ES came back up above this short-term high here where these relative equal highs were sitting. Boom. Hit it right there, 350. Right towards the end of the day. Hits it again and then just consolidates the close. But that's how I read price, and that's how you can really start to see what is happening in price action, because it's really a work of art to know how to spot these and where they're moving to. Okay, it trades down into a discount within a PD array, which would be here, trades up on and in, above internal liquidity. You can even measure this range from the high to the low of this entire range. This is the equilibrium. Look at the amount of orders just hanging out in here the rest of the day. So this is where we would be looking for partials and whatnot. Even after this started trading away, you'd want to take partials, not financial advice, but take partials at the 50%, you know, and then at liquidity points as well. So, because nothing's guaranteed in market conditions like this. But like I said, for tomorrow, we'll see. We'll see if we want to get down into this inefficiency here, this BISI on the 1 hour. Maybe we trade down in there in London, continue back up. Just create some short-term liquidity for tomorrow. I don't expect a crazy range tomorrow, but we'll see. I know we got Powell speaking, I believe, on Friday. We'll see what happens with that. But take it easy, guys. Love y'all. Peace out.